Welcome. In this video, XCN may increase 3,800% soon. So why? We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand.
First of all, when we see such a descending curve in technical analysis, this structure usually indicates that selling pressure in the market has been pushing the price down over time and that sellers are stronger than buyers. However, when the price breaks above this descending curve or downtrend line, the situation changes completely, because trend lines in technical analysis act almost like a boundary. If the price can close above this boundary, it shows that the previously dominant selling power has weakened and that buyers have started to take control of the market. That's why a breakout above a descending curve is often a sign of the beginning of a strong upward move. The breakout of this curve is also a reflection of a psychological shift, because most investors assume the decline will continue as long as the price remains below the curve. But once this line is broken, market perception changes, and many investors think the trend has changed and moved to the buying side. Naturally, this creates upward pressure on the price. So not only technically, but also psychologically, a major transformation takes place. Especially if the breakout is supported by high volume, the likelihood of the rally being stronger and more sustainable increases. That's because volume is one of the most important indicators, proving that the breakout is not a false move. After such a breakout, the market often makes sharp moves. The reason for this is that during the downtrend, sellers have constantly applied pressure, but buyers wait patiently, and when the price finally breaks this pressure, strong buying comes in. At this point, the emergence of buyers can lead to rapid and sharp upward movements. These kinds of moves are often called attacks in the market, and sometimes they can push the price to significantly higher levels in a short period of time. To better understand the movement of a price breaking a descending curve, one must think about the nature of the trend. Trend lines are important barriers that have repeatedly determined the price direction in the past. If the price has pulled back every time it touched this line, most investors see it as strong resistance. But once the price breaks through this strong resistance line, the barrier is gone and a new market phase begins. That's why the moves after a breakout are often sharper, because many investors now see the line that was once resistance as support, which pushes the price even higher. In such a bullish scenario, the price target is often the previous highs or the levels before the decline started. That means after a breakout, the market usually tends to recover its losses. This allows the price to climb step by step to higher levels. These kinds of breakouts also increase investor appetite, because buyers who have been waiting on the sidelines during the downtrend see the opportunity and begin to take positions. This changes the supply-demand balance and makes it easier for the price to rise further. The breakout of a descending curve can sometimes be the first sign of major rallies. Especially when a long-term downtrend is broken, buyers may act much more aggressively, because such a breakout is not only a short-term move, but can also signal that the medium and long-term trend is beginning to change. In these situations, the concept of trend reversal comes into play. In other words, the downtrend has ended and an uptrend has begun. This means the price could move to much higher levels in the long run. Another important point is that after a breakout, the price often makes a retest. That means the price first breaks the curve, then briefly pulls back to touch the broken line. If the price moves upward again from this point, it confirms the breakout is valid. This is a major source of confidence for investors, because it's not enough to just break the line, it also needs to prove that the line has now become support. When the retest is completed successfully, the likelihood of the uptrend continuing strongly becomes very high. During this process, investor psychology is highly influential. When a descending curve is broken, many investors want to jump in quickly so they don't miss the train. These impatient actions accelerate the price even further. However, professional investors usually wait for the retest. This serves as protection against false breakouts. But in either case, the breakout of the curve is seen as a signal of a major move in the market. So whether immediately after or following a retest, the price generally continues strongly upward. In conclusion, the breakout above a descending curve is one of the most important bullish signals in technical analysis. This move shows that sellers have lost strength and buyers have taken control. If the breakout is supported by volume, the psychological perception shifts completely, and this change creates a big impact on the price. In such a situation, upward moves become inevitable. It's critical for investors to closely follow these kinds of breakouts in order to take advantage of opportunities, because every descending curve, when broken, can signal the beginning of a new uptrend. But we can't base our analysis solely on the curve, so let's also take a look at some other metrics. Stay tuned.
The presence of a long-standing major downtrend in the RSI indicator actually shows that the market is generally in a weakening momentum and that buyers are being suppressed in price movements. However, the critical point here is the possibility of this downtrend being broken, because in momentum-based indicators like RSI, trend breaks send strong signals not only to price action, but also to the psychological structure of the market. Especially when the RSI moves within a large and long-term downtrend, it reveals that investors are constantly faced with a perception of suppressed momentum. But once this line is broken, the resulting picture means that the pressure in the market is lifted and a new balance of power is created. This is why the break of a major downtrend in RSI can trigger not only a short-term reaction, but also the beginning of a strong long-term upward trend. At this point, it is also important to keep in mind that due to its nature, RSI has a high probability of giving signals before price movements. Because RSI does not trail behind price, it interprets price action in advance, allowing investors to find clues about the future. If RSI breaks a major downtrend, this often serves as a leading signal that price will also enter a similar upward momentum. This situation increases investor confidence and creates a rally is starting perception in the market. That perception alone can attract new waves of buyers to support prices. Such a trend break in RSI is generally considered one of the strongest indicators in technical analysis that the dynamics in the market are changing. Breaking such a major downtrend also means breaking a kind of psychological chain in the market. Long-term downtrends instill in investors the belief that no matter what, price will fall. But when RSI breaks this line, it sends a message to investors' subconscious that this pressure is over, a new upward period is beginning. This psychological break helps price action gain momentum as well, because investors no longer see declines as opportunities, but instead shift to chasing the rally. This change causes broader groups in the market to act on the buy side. The reason strong volume increases and upward acceleration are often seen in the price chart after such RSI breaks is precisely this. A major downtrend break in RSI can also be seen as the first signs of a bull market, because such a break in momentum usually makes price take on a much stronger structure. Especially when RSI has been stuck in a downtrend for a long time, after the break, it tends to rise rapidly and climb toward the 70 level. This is a signal that prices may be entering a significant upward period. In such a scenario, RSI trend break leads to major changes in investors' strategies. Instead of thinking short-term, medium and long-term bullish scenarios come to the table. Because investors know that when a strong indicator like RSI breaks its downtrend, this is not an ordinary signal, but the sign of an important transformation. It should also be remembered here that an RSI trend break can often overlap with chart patterns seen in price. For example, when price is within a flag, triangle, or head and shoulders pattern, RSI breaking its downtrend provides strong support for that pattern to resolve upward. In other words, the break in RSI provides additional confirmation supporting chart formations. This speeds up the decision-making process for investors and causes more participants to take long positions. As a result, both technical structure and momentum support the rally simultaneously. Breaking a downtrend in RSI usually means more than just a price increase. It also means higher volatility and a more active market. Because when the downtrend is broken, market stagnation ends and price seeks direction. During this process, price movements spread into wider ranges and new opportunity zones emerge. Especially large funds and institutional investors closely watch these RSI breaks, because these moves allow them to enter the market more safely. When institutional investors also participate, prices tend to advance upward much more strongly. The break of a major downtrend in RSI also signals the beginning of a new uptrend in the indicator itself. Because leaving the old downward line behind means RSI is now starting to form higher lows and higher highs. This structure is the most basic indicator of an uptrend. In other words, is not just the breaking of a line, but also the realization of a structural change. This suggests that a long-term upward period may be beginning in the market. In such a case, RSI often settles above the 50 level and moves toward 70. This emerges in parallel with the strengthening of the bull market on the price chart as well. In addition, such a break in RSI can also be confirmed in different time frames of the price chart. For example, when RSI breaks a major downtrend on the daily chart, momentum recovery can also be seen on the weekly chart. Such multi-time frame alignments give investors extra confidence because it shows that the market is not only in a short-term but also in a long-term upward tendency. Thus, investors' strategies adapt not just for a few days or weeks, but for a rally that could last months. This increases buying appetite and helps the market advance more strongly. The price rallies following an RSI downtrend break are not limited to a small bounce. On the contrary, this break is often the harbinger of much larger rallies. Because investor confidence grows, new capital enters the market, and price momentum strengthens. Especially long-term investors see this RSI break as a reversal signal and decide to hold on to their assets. This contributes to the constant upward push in prices. When short-term traders also join this upward movement, a strong chain reaction forms in the market and the uptrend grows exponentially. In conclusion, the break of a major downtrend in the RSI indicator is not only a technical development, but also a psychological and structural transformation in the market. This break lays the foundation for the start of a strong rally and rebuilds investor confidence. Such trend breaks in RSI have preceded many major rallies in the past. Therefore, in such a scenario, it is of great importance for investors to increase their attention and be prepared for the rally process, because these breaks are considered one of the strongest signals that a new bull market is beginning in the market.
When a descending triangle pattern appears, the first thing that usually comes to investors' minds is the likelihood of a downside breakout, because in classic technical analysis books, this formation is described as a bearish continuation pattern. However, markets often move beyond textbook expectations, and since charts reflect investor psychology, different scenarios can certainly emerge. In particular, if the price, after being under pressure for a long time, breaks upward, this is considered a very strong buy signal in technical analysis. The scenario we are talking about here is when the price breaks the upper trend line of a descending triangle and the measured target is carried upward by the height of the triangle. In this case, the potential price movement points to roughly a 3,800% increase, which reveals an extraordinary potential for the market. For such a breakout to occur, the triangle formation must first be properly formed. A descending triangle consists of a downward sloping resistance line at the top and a relatively flat support line at the bottom. This structure shows that sellers are increasing pressure by making lower highs each time, while buyers are trying to defend a certain level. In other words, every new peak forms lower than the previous one, but the bottoms remain around the same levels. This picture reflects that sellers are more aggressive, while buyers are patiently defending a price band. At this point, the direction of the breakout becomes crucial. If buyers step in strongly and break that upper resistance line drawn by sellers, this move shows that sellers have completely given up and buyers have taken control. Breaking this upper line is a major psychological trigger for chart-watching investors, because while many investors classically expect a descending triangle to break downward, the opposite move creates a surprise effect in the market. This surprise effect can trigger a kind of short squeeze where short position investors are forced to cover after their stops are hit, pushing them into buying. In such a case, not only existing buyers but also sellers trying to cover losses create additional buying pressure, which rapidly drives the price higher. This greatly accelerates the upward momentum. As for the measured target, in technical analysis after a triangle breakout, the target is calculated by taking the maximum height of the triangle and projecting it in the breakout direction. For a descending triangle, this height is the distance between the first peak and the support line. This distance is added to the breakout point and the potential level the price can reach is revealed. If this calculation points to a massive 3,800% increase, it means a huge explosion both technically and psychologically. A 3,800% rally could indicate not only a short-term jump, but also the beginning of a large-scale bull trend. If such a rally occurs, a domino effect emerges in the market. First, technical traders notice the breakout and start buying. Then, fundamental investors see that the price rebounded strongly from a major support and broke an important formation upward, and they join in. Soon after, the media starts reporting on the surge, charts are shared on social media, and even people previously uninterested in the market hear about it. This stage is the FOMO stage, leading investors to rush into positions. Each new participant contributes to driving the price even higher. An upward breakout of a descending triangle has effects beyond just price increases, it also fundamentally shifts market psychology. This breakout is technically a very rare event. Usually investors believe this pattern will lead to a decline, but when the opposite happens, it creates a broken expectation scenario. This signals that the market is entering a new cycle, which could mean not just a short rally, but the beginning of a longer-term trend. Another important point to note is that such a rally must be supported not only technically, but also by liquidity. If the price moves upward after the breakout with high volume, it shows that the move is strong and sustainable. High volume boosts investor confidence because it indicates not just a speculative move, but the formation of a strong market consensus. If this move is truly supported by volume, a 3,800% increase becomes entirely possible. A 3,800% rally may sound almost unimaginable to investors, but examples of this exist in financial markets. Especially in the cryptocurrency market, many altcoins have experienced such surges in the past. The reason for this is the relatively small market capitalizations and the ability of sudden spikes in investor interest to drive prices up quickly. So such a large increase is not only a theoretical calculation, but also a practical possibility. To best understand such a rally after a breakout, investor psychology must be emphasized again. The liquidation of shorts, the entry of new buyers, media attention, and the FOMO effect combine to leave almost no resistance in front of the price. For this reason, an upward breakout of a descending triangle can be the beginning of an extremely strong and long-lasting uptrend. Investors should be careful not to miss such an opportunity, watch for volume signals confirming the breakout, and then take positions strategically. In conclusion, the principle in technical analysis that the price should rise by the height of the triangle after breaking the upper trend line of a descending triangle is crucial. In this case, the rule points to an extraordinary 3,800% increase, which could potentially mean a historic opportunity for investors. If such a rally takes place, not only the price, but the overall market sentiment will change completely, starting a new bull cycle. Therefore, an upward breakout of this formation could be a harbinger of a major transformation in the market.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.